Hi, this is Randy Finney with Right Side of the Chart, and this is a closing market update for Tuesday, October 8th, 2019. We had pretty decent down day on QQQ today, so let's just recap. Starting out with yesterday, what kind of paved the way for this drop. I'll start out with those bearish engulfing candles on the 60-minute chart. Let's see here. Okay, here's what I want to do. Let's take away all the trend lines. And we did finalize, that was the mid-session or late session video I was doing. I said if we finalize that, to get a bearish engulfing candle, what you need to do is engulf the body of the previous candle, not the entire candle. All the better if you do, but the body is the fat part. So that was the previous body. This is when we're doing the video. So you can see we clearly, this candle right here, the body of that candle engulfed the previous three candles right there. So that was your sell signal. And as I said, it's a pretty effective. I love these bearish engulfing candles because the risk reward is so favorable. If you take a short when you get the bearish engulfing candle, you set a stop just above the top of the candle. If you want to be more aggressive, you can go a little north of the midpoint. I find that sometimes I'll run it right to the midpoint, and I think I mentioned that yesterday. And most importantly, don't look for a bearish engulfing in the middle after a bottom. Like, in other words, if this happened to be a red candle here, ignore that. They need to come at the end of an uptrend, and since this is only a 60-minute chart, that's fine. That's short-term trend. On a daily chart, you want to see a clear uptrend leading up to it. And then again, as I said yesterday, ideally you want to see, if you want to be safe, play it a little safer, wait for a confirming red candle, and that's what we had. Yesterday's closing candle at the 4 p.m. close was solidly below that previous candle, so that was your confirmation candle. And then today, of course, we gapped down and finished the day down better than 1.5% on QQQ. So that played out well for active traders. Now let's take a look at a couple other things here. I'll get to SPY in a second. We'll hit on the futures. But this is what I had posted in the trading room. So today my focus, where I was often, and even though I'm usually trading NQ in lieu of QQQ, I like the futures, but I'll trade the Qs sometimes, especially in IRA accounts. I'll use, if I don't feel like using the futures, I'll do that sometimes in there as well, or I'll use the leverage ETFs. If it's a swing trade, I'm going to hold for a while, and I don't want to have to worry about rolling the futures. All right, this is QQQ today. So when what happened today, as you can see here, it shows pretty good here. We had gapped down below that 186.98 level. Here, let me go back to the current chart. We'll start there, and then we'll get back to this. So this was this morning right here. We gapped down, and as I posted at the time, that was the same level I had on my chart ahead of time. 180, called it 187 yesterday, and that's a very or at least in the short term here in the world we're living right now, in the world of 60-minute charts, nothing big happened, by the way, today on the daily charts. Even though we're down 1.5, I don't see a lot of significant technical developments there on the daily charts. I wish I could say that we did have some, and if they're time permitting, I'll get to that, and we'll keep the video relatively short. But there you had a gap right there. You had quite a few reactions here. We went down there, and a second gap there. So you have the top of two gaps, and then that's where we gapped down today as well. So very technical level, because we gapped and we popped a hair above it and we couldn't hold it. So right after the open today, as shortly afterwards, I posted in the trading room there that that we had gapped below it. And so it entered the gap, which increases the odds that the gap will be backfilled. In other words, I set an objective target for an active trader to cover short here. You had technically the bottom of the gap there at the blue line, but there's that big 185.90 level. That's really where I had my eye on. And so fast forward to what happened, or I can show you right here. It was hit. You can see right here. Yeah, I followed with an update. That level was hit. If this chart loads, there it is, 185.90 support, near-term target hit. And I said in that post at the time that I favored a bounce right there. I said I still favor more downside from here, but the odds of a snapback rally off this support level first are decent. So you can see, have us coming back up to the top of today's gap, which again is that same level we were looking at, and that's exactly what happened. So now, yes, a lot of what I'm doing is active trading stuff, and I'm going to say this, there's not a lot in this video for longer term swing traders, because I didn't see any very significant developments on the daily chart. 1.5% down day, volatility's high. We had a big rip up. I told you, that I was, not reading really much of anything into that unless it continued to go, because we kept the downtrend intact. Let me just remind anyone that hasn't caught any of the recent videos, this is the downtrend off the highs here on September 12th, I believe it was, 11th or 12th, and a downtrend is defined as a security making a series of lower highs and lower lows. And so despite that, what may seem like an impressive 4+% rally off the lows the other day, it was nothing more than a simple counter trend rally so far. Hey, things can change, but nothing more than a counter trend rally right now, or was in a longer term trade. Now look, so here's the thing right now. You want some big levels, we need to undercut the recent lows. That would obviously be bearish. It's also support, so that should definitely, I would believe, open the door for an additional wave of pretty powerful leg down, some additional selling, and the bulls want to see, and it's still possible at this point. It's too early to say that this isn't the start of maybe a new upterm trend. I'm not trying to confuse you here. I'm just showing you what I see, and that we can't extract too much from today's action other than it does keep the downtrend intact as of today, because we failed to build on take out yesterday's highs. Yesterday put in a lower high, and we have a pretty impulsive reversal off that high, which indicates we're going to continue to go lower right now. And if we do, we'll need to take out that low right there, and it keeps the downtrend intact. Otherwise, bulls want to see that previous high, of course, and then you have really two right there, two equal highs. And this would be certainly near-term bullish and quite likely open the door for a move to a run back at the all of these previous reaction highs and then the previous all-time high right here. So those are the levels to watch. Keep it very simple. You want to stop the video there if you're not an active trader. Those are the levels to watch. Now, dig down, get a little more granular here. Also tell you why I was expecting QQQ to reverse shy of the gap here today once it entered that. So let's go back to, well, what we'll do is take a look at SPY, and I might release the afternoon session analysis video I did. There's something I do want to share publicly on the channel. I'm working on a post. I've spotted there's some glaring divergences that stand out to me right now between junk bonds and the energy stocks, and I covered that extensively in the post earlier today, but I wrapped that in with some mid-session analysis. But I'll go ahead and release that. Also working up a chart to get out on the front page or right side of the chart, screenshot of that chart, and really what it's telling me is there's just one more in a long line of red flags building in this market. Unintended consequences of quantitative easing, and it doesn't bode well for the high yield or junk bond market. All right, but let's just talk on today. So what happened is we tried to punch into, remember, we had that big gap there, that level I was looking at, multiple gaps here and here recently. Wrong tool. Let me grab my box tool here and tell you gap there, gap there. And we bounced around it all day today, entered the gap, and normally, I said this in the trading room, and I said it in that last video this afternoon, that while normally once you enter a gap from below or above, you will backfill that gap. And but there were a couple things coming into play. You had a potential downtrend line here. I'm not crazy about this one. I probably should tune it down a little so it doesn't stand out. It's already been traded through. But it also, I left it there because you guys remember that was what I said is a failed breakout, aka bull trap right there. We took out that trend line and then failed. So that kind of goes into my near-term analysis. Okay, so if this was a bull trap, you have bulls that took the breakout, longs I should say, and the lower you go, they feel pain. Their stops start to get cleared out. And so today again, that was the aftermath, if you will, of that bull trap, and of course the bearish engulfing candle there. So anyways, why did I expect that to fade a little shy there? Is because at the same time, as I always say, even though wasn't trading ES or SPY today, I will watch SPY. So when I did that video, while QQQ had entered the gap, SPY yet hadn't. SPY was right here during that video testing that gap as well. And what I said, it's not today's gap. See, technically speaking, we gapped down a little lower on SPY right here, and so that was technically the top of the bottom of today's gap. In other words, from yesterday's close to where we opened today. However, we had this big significant gap here from was that Friday's gap? No, Wednesday's gap. You also had a gap right here from Friday. There's Friday's gap right there. And you had, remember I called this area Gap City. When you go back to the August trading range, a ton of gaps. And you've heard me say the word gap now 100 times. I could probably say it 1,000 more and it wouldn't be enough. Traders love gaps. They flock to gaps. They are natural support and resistance. The top and bottom of the gaps, as I said, once entered, a gap is usually backfilled quite often, not always, but a lot. And again, they are, there's just a lot of them in this area. So when volatility spikes, traders start flocking more so to to technicals, meaning the charts, than fundamentals. Right now, everyone's trying to process. You've got two camps. Those that think economy's in great shape, it's a little turned down, but don't worry, we got the Fed at our back. And you have the others, like myself, that believe, well, it's 11 years into it. We've had low, easy money for over a decade now, pushing on a string. Fed can inflate their balance sheet, which they're going to do today. They're going to, it's been an inflated balance sheet for over a decade. But either way, low rates, more money printing. I don't think it's going to do the trick, but we'll see. Let the technicals be my guide. Let me again give you the level. So that is what happened, by the way. So SPY was rejected at the that resistance level defined by that gap and some of these others here. That was that line right there, and that's what you have there. So technically, that's what happened today. Now, what has to happen going forward? Again, to keep it very simple, and at the risk of oversimplifying it, I hate to do that because it's not always so black and white, but bulls want to see us above this line right here, that previous reaction high. That should open the door for move up, and especially right here. I showed you on QQQ, you had two reactions. Here you have three equal reactions right around the 297.86 level. So bulls get a check mark. If they can take this level out, then this level, it would certainly open the door for a test of the previous highs right there. Big level around just north of 302. And if they get that far, this market's MO has been usually punch up, make a marginal new high, even though that one was very slight. But each of these highs, this one here, and then you had a marginal new high, slightly higher, slightly higher. So the point is, if we get above there, we get this second check mark, we'll probably go on to make a marginal new high. And define your trading style and where you think the market's going. To me, on swing positions, I'll ride that out. That's only, well, now we're a little lower where we closed today, but it all depends on how the charts develop. I can't say how I'll be positioned if and when we get there right now, because I might see some other developments in the charts that may convince me otherwise. But right now, nothing's waffled or changed. I'm still favoring more downside from here. I still believe that this was just a counter trend rally last week in a new downtrend off the highs right here. And bears want to see this happen. The check marks they need to see. This trend line right here, we have numerous reactions on this trend line. And so that would be certainly a checkbox for the bears. And then ultimately, on both SPY and QQQ, undercut, take out the bottom of the August trading ranges. I thought when we got here last week that we would just continue on down, at least hit the bottom and bounce before breaking down. And we didn't. We had a kickback rally first, but I do think if we continue to go down, we undercut, get anywhere close to this low from last Wednesday, or Thursday, that is. That's Thursday's low. We'll probably go ahead then, I would expect, and punch on down through there. But a lot of work to be done. Not so much in time or price. Just to me, each of these levels are kind of big, and so we need to see that happen. So that's the two check marks for the bears, this line and that one. Two check marks I gave you for the bulls, but don't take your eye off the other index. If you're a SPY trader, watch QQQ, because a lot of traders trade this. And if you get a flood of sell orders or buy orders on the Qs, it's going to drive up the same, not the same exact basket of stocks, but it'll drive up the majority of the same top-weighted holdings: Apple, Microsoft, Amazon, all those. So that's why keep an eye on both of these charts. So there's your levels. I think that covers what we need to watch going forward. You still have the top of the gap right there, come into resistance tomorrow. Potential downtrend line, only 2 reactions, so we have to put a question mark. We don't have a third reaction here, but you have that previous high. So again, 189.40, bulls get a check mark if they take it out, and then those 2 previous highs right there at 190.53, that's their second check mark. Probably open the door for a move to new highs is my guess, and bears want to see the that 180. I think this trend line on QQQ is not as significant. We don't have as many reactions as SPY. So on QQQ, let's see, somewhere around that 181.50-ish level there. And of course, then the that low back in early August. Okay, and other than those the bearish engulfing candles on the 60-minute charts, what was the catalyst for today? It was easy, and here's why. If you trade futures, remember, if you don't, I'm not encouraging or telling anybody what to trade anything. You learn, watch, paper trade, but when if you are trading QQQ, consider MNQ if you don't have enough to trade the NQs. MNQ is the mini NASDAQ when it trades on the same levels as the NQ futures. And the benefit is it's round-the-clock trading. You could have had there were 2 sell signals recently. In yesterday's video and throughout the day, I highlighted this uptrend line here on the 60-minute chart, which gave us a bearish rising wedge pattern confirmed with negative divergence. So I said sell signal number 1, which did come yesterday, toward late in the day, was a break down below there. That was sell signal 1. I said look for. We went on last night, made a back test, so that was actually your second objective shorting op right there. Back testing the wedge from below, and then I said yesterday sell signal 2 would come on a break below 77.22 on NQ, or 77.22 1/4, and that happened right there. So this happened in the early session this morning, took us down there. We hit this first support level, and again I had us doing that and then coming on down. That was NQ, and I gave it on ES. I had the almost identical chart, or at least the same setup on ES. I said we have an uptrend line, 60-minute chart. We have negative divergence. Sell signal came late yesterday on the breakdown there. We had a little snapback rally, and said sell signal number 2 would come on a break of 29.35, and that's what happened. And so again, those were posted in pre-market today. Let's take a look at the charts now. NQ. There it was. We hit that level, and let's see where the bounce came. We had a bounce there. We went a little under it, but we did hit the bounce target there of 77. We came in, and that's nice, and that's also what keeps or kept, at least at this point in time, the bearish situation going. Breakdown, just like remember on NQ we had a break of the trend line in a back test. Well, here you had a break of support. Technical Analysis 101, support once broken becomes resistance. So there was another objective shorting op today right there if you're an NQ trader. And of course it aligns with everything I just showed you on SPY and QQQ. And that was your objective shorting op on the back test of 77.22, which certainly proved to be like I said, it was super well defined. We're talking close to a dozen candlestick reactions on that level recently, and then a bunch more here. And then when we broke, we didn't just limp through and kind of move up and back and forth and meander on through there. We had a pretty impulsive drop. So again, that's why that proved to be an objective shorting op. And sure, it would have been bullish if the bulls took it out, but they didn't. So that's what happened. Okay, a lot of talk on intraday stuff, but again, this is, if you take a step back, if you're not an active trader, whether you're new to this and it's just too much, too fast, hard to react, I get that. You'll get chewed up and spit out in a market like this trying to actively trade. Your account will gradually diminish. So if you don't know what you're doing, again, watch, learn, paper trade with very small amounts. This is swing traders. There's money to be made for active swing traders in this market, whereas investors are really going nowhere now, especially in the most people have in their accounts. They have the S&P 500 index fund, and here we are. I covered this many times. Over a year ago, back here on September 20th, we are below that level. So for over a year now, what happened? Investors had their heart sink down to their stomach. Those that held celebrated and rejoiced when they had that sharp snapback rally. Were even more confident in where the market's going when the market made a new high, pulled back, did it again, pulled back down, but again, they've gone nowhere. So they haven't really lost, but they haven't made money. Now, who's made money? Active traders. And again, this is just indicative more of a topping market to me than anything else. But I know glass half full, it is possible we go on and break out. Maybe it's a consolidation range and we break out. But let me just get back to the charts here. What happened today? SPY, like I said, SPY broke down a while ago. So about the only technically significant developments that I see is we did have a back test off the trend lines on the December 24th lows. They're not as well defined. That trend line's not as well defined as I'd like it on QQQ anymore. As I mentioned, I've had to move it down. We've sliced through it, but this is the one I've been working off of. And again, last week we had an impulsive breakdown below. We came in, we back tested it. Back tested a second day, and so far a pretty impulsive rejection today. So should this continue we move down and we undercut those recent lows, then that will be you can step back and say, yes, that was a breakdown and a back test. As of now, like I said, you can look at it that way, focus on that trend line, but I give things a benefit of the doubt. So although I remain short, my swing accounts and think we're going a lot lower, we still have to undercut those recent lows. We still have to take out the 200-day exponential moving averages, more so on a weekly basis, which would be your 40-week moving averages exponential on QQQ and SPY, and that hasn't happened yet. So we're kind of just here. And XLK, same story. So, if you want to give, obviously you have to give a check mark to the bears today because of, being down, 1.83% in XLK, plus breakdown, backtest. XLK trend line is also a little bit better defined than QQQ, by the way. And there's your breakdown, backtest. So far, we're rolling over. Next sell signal would come, or confirmation on a break below the recent lows, and then that 200-day on XLK. Otherwise, look, we have this downtrend line. If they can pop this downtrend line, it means two things. We have intersecting resistance. And why am I talking about XLK? If you're new to my analysis, this is a stock market. This is it. You don't need to watch any other sector. Sure, I'm being a little bit facetious there, but the REITs aren't going to move the needle. They're 3%. Utilities aren't going to move the needle on the S&P 500. XLK is by far the largest sector, nearly double the second largest of the 11 sectors and the third, and it is also about half of the NASDAQ 100. That's what today's stock market is made of. The strongest and largest companies in the world are technology companies, and they have the heaviest weighting on the index. So what happens here is there's intersecting resistance. If the bulls can pop it above there, they both regain the trend line right there, the recently broken uptrend line, and they've broken above this downtrend line right there, and that would quite likely open the door, unless it's just a fleeting little whipsaw signal and fails, it's going to open the door for another thrust up within this wedge. But unless that happens, we have a breakdown. Market's on a sell signal. I'll be very clear. And so therefore, unless that happens, this is what I favor. Okay, we'll wrap it up here. This has been Randy Finney with the Right Side of the Chart. Have a great day.